Well, folks, there are some stocks in the market that are a little bit like magic. These stocks completely change your life. They are the biggest return profiles you can ever imagine. You make more from these stocks than, honestly, you make from your job in several years by just making one investment into some special companies. And these type of stocks, it seems like every time they get kicked, they get thrown out, they always come back with a vengeance, and they always end up rewarding shareholders. And a few stocks I can name off the top of my head that I've been in the past 6 years that have produced me insane gains, let's call it 1,000% plus. Three of those stocks would be Tesla, Palantir, and Elf Beauty. And one of those stocks we're going to speak about in this video here today, and that is Elf Beauty. They just changed everything forever. We need to talk about what's going on here with Elf. This is absolutely massive, and I mean like beyond massive. And we're going to speak if Elf is setting up to be another millionaire maker type stock, if it's getting set to go on its next massive run that make people fortunes of money, and people are like, oh my gosh, like a very small investment ends up turning into thousands, tens of thousands, hundreds of thousands, or millions of dollars. So we'll speak about that in this video here today, okay? And then after we get done going through Elf and everything that's massive going on there, we're going to talk about Nvidia, the stock that matters more than pretty much any other in regards to the whole entire stock market, right? I'll give my thoughts on their numbers. Is there a huge run ahead here in Nvidia, or is that one about to go on another big run? I'll speak about that and kind of share my opinions and perspectives. And what does this mean for AMD based upon what I just heard out of those Nvidia earnings there? So we'll speak about that in this video as well. And it's action-packed one, folks. One thing only I need from you guys. Hit that thumbs up button, smash that like button. That's all I need from you. I hope that's not too much to ask. This video was many hours in the making, so I appreciate you for being here. And that's all I need, man. Just smash the like button. I hope you can do that for me. Additionally, if you want to be subscribed here to the channel, you can certainly subscribe. It is free to do that. So you can hit that subscribe button, okay? Additionally, if you're looking to access my private stock group, private wealth group, 1000xstocks.com, get access to all my premium courses. The Discord chat, oh man, the Discord chat. If you're an Elf shareholder, Nvidia shareholder, AMD shareholder, you should be in my private group. The chats were popping today, man. And just so many investors of all levels, folks that have tens of thousands of dollars in stocks, some that have hundreds of thousands, some that have millions, multi-millions in stocks, right? Sharing opinions, perspectives on these earnings back and forth, and feelings and all those sorts of things, news. And there was some folks that got some Elf shares for very, very cheap in that after hours session here today, okay? Alrighty, so let's talk about this right off the bat. Huge. Elf Beauty to acquire Hailey Bieber's Rhode in $1 billion deal. This is massive. So where did I start with my research in regards to this? Well, there's this chick I've been hooking up with for like 14 years straight. And so I texted her. I said, you know Rhode? And she's like, yeah, it's the Hailey Bieber makeup brand. I said, Elf bought them. I'm like, what? She knows of it. And she said, no way, really? She said, I don't even know if it's good, which shows you how, I guess, successful, famous, how much exposure this brand has gotten. Keep in mind, this brand just came out in 2022. 2022. And this brand has gotten so famous that people that don't even use the brand know of this brand. Absolutely incredible, right? This gentleman in the private stock group, Ryan Dubs, he said, showed my wife that Elf bought Rhode and asked if she had heard of the brand. She said, oh my gosh, Rhode is huge. Ask any girl, and they love Rhode, right? So definitely good to always see that real world research there, right? Now, if you don't know Hailey Bieber, she is a wife of one of the most famous people on the planet, Justin Bieber. When's the last time Justin Bieber came out with an album, man? That had to be a long, long time ago. Remember the Purpose album? That was a classic back in the day, man. But Justin Bieber, still ridiculously famous. Like, you say that name and, people that don't even listen to Justin Bieber music know Justin Bieber. Like, just absolutely incredible, right? And when you're dealing with this sort of mega celebrity, they're constantly going viral all over Instagram, TikTok, YouTube, all the social media platforms, X, right? Because every little thing, people report on it, right? Oh, Selena Gomez, she just liked this post of Hailey Bieber, and oh my gosh, and oh, Selena, Justin, oh, Hailey Bieber, blah, 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 right? And everybody gets all tied up into this, and, it's just the level you're at. These people are at Kardashian levels of fame, right? Like, just everything they do, every little thing goes viral and just, gets spread all over the place, right? Which, somebody said in the private group, they're like, man, it's got to be great to be one of these mega celebrities. It's like a cheat code, right? You can just come out with a brand and be doing hundreds of millions of dollars in a matter of a few years. Yeah, it's life gets a lot easier, when it comes to making money when you have ridiculous levels of fame like that, right? But big announcement actually just came out a few days ago, and even Justin Bieber actually posted this on his Instagram page, that Rhode Beauty is coming to Sephora. Sephora, folks. So this is a brand, and that's a huge deal for them because they've been just direct to consumer. Direct to consumer is just a fancy way of saying, like, you order off the website and they send it to your house, right? And so now they're going to start expanding into physical retailers with this Sephora news, which is massive, right? And when Sephora posted this, it got 526,000 likes on Instagram, right? We're beyond excited to share Rhode's collection of curated skincare and hybrid makeup. It's coming to Sephora this fall from day one. It's been our dream to bring the product, blah, blah, blah. It's a huge deal, right? Now, additionally, Tarang and the team mentioned this company's done $212 million in revenue in the last 12-month span. Keep in mind, this brand just came out in 2022. And you know how many products this brand has to do $212 million in the last 12 months? Guess. 10 products. 10. If you know anything about cosmetics, makeup, beauty, things like that, like 10 products is not a lot. Like that's hardly anything. Off of 10 products for a brand that's only a few years old, did $212 million of revenue. Now imagine how much this brand can be doing as they get out into physical retailers, Sephora and Ulta and all the others. Like, oh my gosh, right? Now, in terms of social media, obviously they're extremely successful, right? 3.2 million followers on Instagram. Looks like their engagement's great, comments, all those sorts of things. On TikTok, 1.5 million followers on there, which, hey, if you're going to be a beauty brand, you better be on TikTok. You better be on Instagram where you got no choice, right? Now, in regards to how much did e.l.f. pay for this? Well, it's about $1 billion deal. Now, it's very important to understand how this deal is structured. It's comprised of $800 million of consideration payable at the closing of the combination of stock and cash. Now, from my understanding, they're going to do about $200,000 worth of stock, and then they're going to basically do about $600 million in cash. Now, that doesn't mean e.l.f.'s going to, part with $600 million of cash. They'll take out debt to essentially finance the deal, right? Subject to customary adjustments and any additional potential earnout considerations of the $200 million based on future growth of the brand over a 3-year time frame. So this is beautiful. So Hailey Bieber and the team, obviously here at this company, right? They're going to be very well incentivized to make sure this brand continues to grow very strong over the next 3 years as the integration plays out over this next few years, right? Because if it does, they're going to get another $200 million. Obviously, if the brand doesn't do well over the next few years, and they're not going to get that $200 million, right? So Hailey Bieber, the whole team over there, they're very incentivized to continue to work their butt off. It's not like, it's just like do the deal and wash our hands and that's it. And additionally, Hailey Bieber is supposed to have a decent position at e.l.f. as well, which, who knows? Maybe she's there for just this 3-year span after the deal's done, or maybe she's there longer term. We'll see. Bieber set out to create a brand centered around skincare philosophy, one of everything really good. Now, what's fascinating here is $212 million in 12 months, right? And they mentioned Rhode's products are currently available at rhodeskin.com, with plans to launch its first physical in-store partnership with retailer Sephora throughout North America and the UK before the end of the year. So just understand, just based upon the if you think about any sort of brand like this, at the end of the day, you should do way more in revenue from all your retailers that you sell to rather than, just off your website. So as this company expands into online retailers, physical retailers, I'm assuming over this next 2 or 3 years, which is what they should be doing, the start is Sephora, right? We should see their revenue expand exponentially, just based on that expansion into, getting their SKUs all over the place and not just being, reliant on their one website, right? And also you start getting exposure to the brand in, places that you're just not right now. Because at the end of the day, if you go into an Ulta Beauty or Sephora or any other store, right, and you're looking for a skincare product, you can't even buy their product right now. You have to buy another company's skincare product. And so, obviously this is very, very meaningful in terms of how much revenue growth this could add to e.l.f. over the coming years, right? Now, additionally, you might think, oh, this company, well, yeah, they might have all this revenue coming in, but they're probably losing a fortune. Well, no. Based upon what I heard on the conference call, they mentioned that this Rhode company has very strong profitability and that it's going to be very accretive when the deal is done. So it's not like e.l.f. is just acquiring some brand that, yeah, they're fast growing, yeah, they're bringing in revenue like crazy, but it's going to hold back e.l.f.'s margins and their net margins and their profitability. No. It sounds like this is actually going to be a deal that not only helps e.l.f.'s revenue expand rapidly, but also helps their bottom line expand rapidly, right? Now, you might also wonder, like, why would Hailey Bieber want to do this deal, right? Well, one, they're getting a fortune of money. It's not a small amount of money. Two, e.l.f. has the ability to scale brands. We know that, right? Through what they've done with Notorium after that acquisition, and obviously, through their own company. And also e.l.f.'s expanding around the world. So e.l.f. understands what it means to be a brand that's expanding around the globe and in retailers, right? e.l.f.'s proven that. And so it definitely makes sense to partner with a company like e.l.f., be acquired by them if you're in that sort of position. You get to get your cash out. You get to take some risk off the table, because what if your brand fails over the next few years or something like that, which, my guess is it's going to go pretty darn well. But let's say it failed. Well, shoot, then you're going to be out of a lot of money. Here, they're going to be able to get $600 million of cash, right? Another $200 million of e.l.f. stock. And then if things go really well, another $200 million, right? And then think about how much the stock could increase over the coming years. So, let's say Hailey Bieber and those folks are getting $200 million of stock. Well, here's the deal. If e.l.f. stock appreciates greatly over the next 3 years, that $200 million of stock becomes $600 million of stock, $800 million of stock, $1 billion of stock, right? That's the beauty. And so this is where, it can make a lot of sense from both sides. It's not like one side wins and one side loses. It can make a lot of sense from both sides, right? Now, my guesstimate is if they did $212 million just in the last 12 months, and given this brand is still very early and they're not even in physical retailers yet, my guess is over the next, we can call it 2 or 3 years, they should be able to scale this brand to about $500 million, if not more than $500 million in revenue a year. Now, of that $500 million, my guess is they'd be able to throw off about $100 million to maybe $150 million a year toward net income, which will actually help this deal, I guess you can say, get paid off very, very quickly. Now, if they could scale this brand to $1 billion brand, which who's to say they can, but let's say they expand this brand over the next 5-10 years and they get them to a run rate of about $1 billion a year. Oh my gosh. Then we could be talking about, easily $200 million to $300 million a year thrown off to that bottom line. So then you run the numbers on the fact that they did $1 billion deal and you start saying, okay, if this company starts to throw off $200 to $300 million per year in net income, oh yeah, the deal was very, very worth doing in that sort of situation, right? So, a lot's going to go into the success of this, but based upon the numbers they've reported, based upon, thinking about distribution of this brand across the world, obviously in physical retail, and in e-commerce, I mean, there's no doubt in my mind they at least have the chance to get to $500 million of revenue. It's just a question of, can they make this $1 billion brand? And there's a potential. Right? You can't guarantee it, but there's definitely the potential there. So this deal, I'm very, very happy. I'm very, very excited about it. And it seems like it has the writing on the wall to be a win-win across the board. And remember, this isn't like this is e.l.f.'s first deal. It's not like this is the first time e.l.f. has acquired another brand and tried to integrate them in. They've done this with several brands over the years. This is just a very, very meaningful, big deal in regards to what they're doing there. So, very, very happy about that. Now, what about e.l.f.'s numbers? Now that we covered the deal. Well, here's the deal, okay? A- quarter, which is very, very good, right? $332 million of revenue versus $321 million in revenue they did in the same quarter last year. Cost of sales went up slightly, about $1.5 million, about $1.7 million, right? Gross profit went to 237 million from 227 million. That's an incredible gross profit. Look at those gross margins, right? SG&A actually fell for the company pretty substantially, down to 192 million from 210. Operating income climbed all the way to $44 million from $17 million in the same quarter last year. So they're improving their profitability pretty rapidly here. Other income was up to $2.5 million. Interest expense fell for the company quite substantially, down to $2.8 million from $4 million. Income before income taxes went to $44 million from $11 million. Net income right around doubled year over year. $28 million plus in net income versus $14 million plus in net income in the same quarter last year. Diluted EPS 49 cents versus 25 cents in the same quarter last year. The only reason it's not an A-plus quarter as a revenue growth wasn't that insanely strong. Do keep in mind, this is very important, everybody understands this, the company had incredible, insane revenue growth the last couple of years in the same quarter. So, they're coming off some ridiculous comps, and the impressive thing is they were still able to grow the business, even though, you look at some of these quarters they had in the past, they were growing revenue like 70, 80%. Obviously, just ridiculous numbers, right? No, additionally, the balance sheet looks really good here. Total assets for ELF, $1.2 billion plus in total assets, and that's versus total liabilities of $487 million. So very good balance sheet at the company with a very, very good income statement at this company as well, right? No, woo! This scared everybody. This was a horror movie. Oh my gosh. They didn't give an outlook for fiscal 2026. And this caused the stock to go down substantially after hours when it initially came out. Like, oh my gosh, they're not giving any guidance. People freaked out over this, right? First off, my opinion on this, like, how could they give any sort of reliable guidance? It makes sense to not even give a guidance. Dude, we don't even know what these tariffs are going to be. Trump doesn't even know what the tariffs are going to be. We have no clue where these China tariffs are going to end up, right? What countries are going to retaliate more or not retaliate more or take off tariffs. The tariff situation's a whole mess. It's still got to get worked out over the next few months. It's getting better, but it's still a whole mess. And so if you're ELF, it makes more sense to not even give a guide right now. Let these numbers be more figured out over this next 3 to 6 months. And then if you want to start giving back guidance again, you can do that at that time. But it's, we don't know. We don't know where any of these tariff numbers are going to finalize at. So that creates a messy situation for ELF that, obviously makes a tremendous amount of their product overseas, right? No, the stock went all the way down to the 70s after hours, and obviously it climbed back substantially. Once people figured out, okay, they didn't give the guide, but that makes sense. And then they started looking over the numbers. They looked at that income statement, looked at their balance sheet, like, okay, man, this is actually pretty good. And then they started looking into some of the details of that deal, and I think people started getting a little more bullish. Now, what's interesting about this is after hours, a lot of that price action is usually based upon the algorithms and based upon Wall Street. We haven't even seen retail yet, which I wouldn't be surprised if retail comes in and buys this stock pretty heavily tomorrow as well. So do keep that in mind, right? Now, we did have one person in the private group kind of freaking out. Oh my gosh, ELF stock going down so much, right? And I posted this inside the private group and said, oh my gosh, having a heart attack. I'm so scared. The stock is crashing so bad. It's all the way back to where it was 7 days ago. And even when ELF fell to $81, literally that's where the stock was just 7 days ago. Sometimes people get so bent out of shape on these earnings, and, I understand because, that individual might be newer to the market or something like that. But if you're a newbie investor, just understand stocks fluctuate heavily on earnings, heavily, and especially when you own more of a small cap name. Dude, those stocks move 10, 20%. You just can't freak out. Look at the numbers. If you're a long-term investor, whatever it's going to be is what it's going to be. But, a lot of times, especially newbie investors, man, they freak out. Oh my gosh. Oh, for me, I'm like watching the stock after hours. Big deal. When I saw it go to 79, what does it matter? They literally, that's higher than ELF was just a few weeks ago. Look at where ELF was just back here a few weeks ago. It was $65 a share, $66 a share. Even at 79, it was still up massively from where it was just a few weeks ago. So, gosh, man. I said, sorry, guys, can't listen to the call. I started making jokes about it. I need to list a Ferrari on Craigslist because, ELF stock's crashing so bad. And then it went to the 90s, and I said, phew, good news, man. No, don't have to sell it after all. No, in all seriousness, we got some more good news in regards to ELF. They're doing what I said they were going to do. They're going to go up $1 on every product. $1. And I even put this in the private group. I said, I try to explain to people a million times. And if you heard me talk about ELF, I consistently point out this point. What is the point I always point out? ELF products are extremely affordable. Their products are like, the far majority of their products are like in that $5 to $10 range. And that's selling at retail price, which means, it's actually costing much less than that, obviously, to produce that product. So I said, I've always made this point over and over with ELF. I said, they could go up 50 cents, $1, $1.50 on their product. And it's not like their customer base is going to revolt and be like, I'm not buying ELF now. No, because it's still the highest quality product you can get at that price point on the marketplace. And so they'll continue to put up numbers. And so what is ELF doing? Exactly what I told everybody they're going to do in this sort of situation. So they can maintain margins, and don't be surprised if they end up growing margins on this. And it helps their revenue as well. I just don't see it where because they go up $1 that everybody's going to say, I'm not buying ELF anymore. I don't see that happening. I think they're going to be just fine in regards to this matter, right? And so I told everybody, man. I told everybody what was going to happen, and now people are beginning to understand, okay? No. Listen, man. Obviously I own this position, the public count, up 1,143%. I own it in other portfolios as well. I'm a very happy shareholder. After those earnings, after the Bieber news there, I walked away feeling like I wish I owned more shares. I wish I owned more shares. And in terms of where the stock's headed, I could see the stock going back to 200 plus and hitting new all-time highs next year in 2027. This year, I think it's going to be hard to get new all-time highs because it needs to go 200 plus to get new all-time highs this year, just because I think the numbers are going to be messy for the next few quarters, right? As they get that deal done and integrated in the company. So I feel like the numbers are just going to be messy for the remainder of this year. Now, that doesn't mean the stock can't climb this year. That stock could easily go 100, 125, 150 this year. But I think it's just going to be hard to set new all-time highs this year. I would expect new all-time highs with the stock likely in 26 or 27 in regards to this baby. And so, money maker. Now, additionally, we got a very interesting phenomenon because now that this deal, is set to go through, analysts are going to have to bring up all their numbers. Analysts were basically expecting no growth for ELF for, if you look on a trailing 12-month basis, they're expecting no growth anytime soon. Well, ELF's organic business is growing, right? Now they're going to be going up $1 on their products across the board. That's going to help their revenue because I don't think there's going to be anybody out there that really says like, I'm not going out to buy ELF's products. So I think organic growth could even pick up quite a bit, right? And their comps get easier as this year goes along, so do keep that in mind as well. And then additionally, you got this Hailey Bieber brand coming in that's growing rapidly. So you got to assume that's already $200 million plus of new revenue coming in. But then they got the Sephora deal coming in, and then the brand's getting more and more famous, more and more customers, recurring customers, things like that. So, who knows what we could be looking at for over the next 12 months for that brand alone. Like, could we be talking revenue of $300 or $400 million over the next 12 months once that deal is completed? That's a possibility, which means all these analyst numbers need to go like up here like this. So the moral of the story is we're looking really darn good in regards to ELF. Like really, really, really darn good. Okay. Very happy shareholder. Now that leads me to Nvidia, big dog, the stock that matters the most to the stock market out of any of the others. What's my opinion on these earnings? What's my opinion on, is the stock about to go on another big run here? What's my opinion on what does this mean for AMD stock? Okay. Well, obviously the stock's up after hours, but it's not like it's up a lot. Like 4% move, it's rather modest, especially for a stock like Nvidia, right? So which means people are kind of like, it almost feels a little bit more like a relief rally than like an excitement rally, right? No, they beat on their earnings. Who didn't think they were going to beat on their earnings? No one. Everybody knew they were going to beat on their earnings, right? 96 cents adjusted versus 93 cents. Revenue also beat 44.06 billion versus 43.31 billion. That's already a problem. You may say, how's that a problem? They double beat. Big problem. Nvidia spoiled investors for the longest time. Nvidia was not just coming in and beating numbers. They were obliterating numbers. They were obliterating revenue estimates. They were obliterating guidance, earnings per share. It was like, if you saw the stock really from 2023 all the way through 2024, they were not like small beats. They were just knocking out of the ballpark every single time. Now they come in and, yeah, they beat numbers, but it's like 3 cents EPS, right? They beat revenue by, I mean, they didn't even beat revenue by $1 billion. I mean, for Nvidia, that's bad, you know? But then the guidance came out. Nvidia said it expects $45 billion in sales for the current quarter. My guess is they're going to do better than that, by the way. My guess is they'll probably do 46 or 47 billion, somewhere around there. But they guided for 45 billion. That's underneath analyst estimates of about $45.9 billion for the quarter, right? No, the company said its guidance would have been about $8 billion higher, except from the loss of sales from the recent export restrictions to China bound H20 chips. So, you know, if it wasn't for that, we could be talking about Nvidia would have, blew numbers away. But this export deal is a huge deal. I mean, $8 billion of lost business there? That's substantial, man. Not a small number. Nvidia says its gross margin came in at 61% for the quarter. If that whole situation, the whole China-related charge wouldn't have happened, they would have been at 71%. So we're talking about 1,000 basis points, 1,000 basis points of a difference of their gross margin because of that, right? Now, additionally, Nvidia CEO Jensen Huang told investors on the earnings call that the $50 billion market in China for AI chips is effectively closed to U.S. industry. Now, that could always get removed. So do keep that in mind. Don't assume just because that's the way it is right now, don't assume that's the way it's going to stay. Here's the deal, right? China could leverage this. China could say, in regards to trade deal, hey, we'll do this and this and this, but we want those chips. And maybe Trump's going to make some concessions on that, right? To a certain extent. I don't know about everything, but maybe some concessions. And so don't assume that the China market is closed for Nvidia, AMD, and these other companies. It might be, but don't assume it's going to stay closed for the next several years. For all we know, a deal could come out 60 days from now, 90 days from now, 30 days from now, 120 days from now that says these companies can sell into China. Maybe it's just that some products are limited or something like that. Keep that in mind, folks. Keep that in mind, okay? Don't assume that this is all done. And keep in mind, if all of a sudden we start getting word that, that's going to be part of the trade deal or something like that, then you talk about meaningful upside to Nvidia stock for the remainder of this year. Like, let's say it's 2 months in the future and we get news come out, U.S.-China trade deal's done, and our semiconductor companies like Nvidia and AMD can start selling in China. Boom. You're going to get a banger move up in Nvidia stock. And obviously AMD as well. That would be massive, massive news, because all of a sudden you're going to be talking about billions upon billions, if not tens of billions of dollars that these companies will have in revenue per year that they won't have right now, right? And then what that means to the bottom lines is substantial, right? And keep in mind, Trump has to take this stuff serious, because when Nvidia says their guidance would have been $8 billion higher, listen, that means the stock market would have been a lot higher, right? Which obviously looks very, very good for you as a president. That means that company then has ability to hire a lot more employees, pay out bigger dividends to investors, do all these sorts of things, right? Build new corporate campuses or whatever. So, Trump's a negotiation guy. He loves to do that game. Maybe he's going to negotiate for Nvidia and AMD to make even more chips in America, and that's going to be part of the deal. So it's going to be like a three-way deal where, Nvidia and AMD have to agree to some things, right? And then additionally, China has to agree to some things, the U.S. has to agree with some things, and it's a triangle relationship, and it all ends up working out in that. We'll see. But right now, none of that's priced into Nvidia or AMD stock. So it's just something to keep in mind. And, that would be very, very bullish if that does happen. And, get ready for an absolute ripper rally in Nvidia and AMD if that does happen. Okay. Now, with that being said, on 1000X X page today, I'm not sure if you guys follow the 1000X X page. And by the way, if you don't follow me on X, I always post a bunch of stuff every day. That's very important. You can always go down this description area of this video and click and join me if you use X. But in regards to that, I posted this on the 1000X X page today, right? 1000X stocks. I said, Nvidia moving up after hours, but not dramatically. I said, you can see that Nvidia really needs to grow 20% plus per year for several years to make any decent money. If growth rates falter the next few years, then no gains would be likely, right? And, if you look at these kind of projections I ran here on our intermediate projections on 1000xstocks.com, look at this. I ran their revenue growth at 20% per year. from 2026 to 2029. I did the net income growth at 22%, right? And I ran them at a PE ratio of 28 to 35. And you see, you won't really make any money in the stock over the next few years if that's all they do. So the moral of the story is here in regards to Nvidia, even 20% revenue growth per year is not good enough to really make a lot of money in the stock. Now you might say, well, if they're growing 20%, shouldn't they have a PE higher than that? The issue is they're still seen as a semiconductor company, and so they can't really get a huge valuation bump there. Like people always value like the PE ratios of semiconductor companies very, very low, right? And also their net margins are already so incredibly high that I believe analysts have trouble thinking their net margins can grow any substantial way from here, and if anything, they'll go down, right? So you can see that it's going to be very difficult to make money in Nvidia unless they grow over 20%. And the more they grow over 20%, like let's say they average 25% growth or 30% growth or 35% growth, then Nvidia can be a big money maker over the next, we could call it 3 to 5 years. But if this company grows revenue 20%, especially if they grow under 20%, it's going to be hard to make money in Nvidia. And that's why it's really important that the Chinese market gets opened up so a company like Nvidia can sell. Because if Nvidia can sell to China, that's going to increase their revenue dramatically. And then we could be talking about they could comfortably be ahead of 20% revenue growth per year, 2026 to 2029, right? If China's closed down for them, it's going to be hard to see Nvidia growing at that sort of rate. Because then they're just going to be counting on Meta, Microsoft, those sorts of companies, OpenAI, and all those companies to spend more and more and more. And those companies are going to spend more and more and more. But I think the rate of growth of those companies is going to shrink substantially over this next few years. So do keep that in mind, right? And so it just gets harder to kind of make money in Nvidia stock, right? And I even asked this on the 1000XX page today. I said, Nvidia or AMD for the next 5 years? And my opinion is AMD definitely should outperform Nvidia quite substantially. And the reason being is what you're going to see an interesting phenomenon that starts in the second half of this year, where AMD growth rates, and at least in my opinion, based upon everything Nvidia stock I've owned on and off for years, so I know that company very well. And AMD, obviously, I'm now a big shareholder of that company. It's now the second biggest stock in the public count. I believe that AMD is going to start outgrowing Nvidia revenue-wise in the back half of this year. The back half of this year, meaning the third quarter, okay? And that's going to start as like a slow outgrowth, and then it's going to get more pronounced in 2026 and 2027. And so when it comes to AMD, I'm getting a stock here at a 2-year forward piece significantly below Nvidia, but I think we're going to get far stronger growth from AMD, which means the stock price gains in AMD are going to be much more substantial than Nvidia over this next several years, at least in my personal opinion, based upon all the study I've done in this business, right? And the outperformance has already started, in my opinion. If you look at where these stocks bottom kind of in that April timeframe, AMD's up 44%, Nvidia's up 39%. We're not even to the second half of the year. I think you're really going to see that outperformance get accelerated the second half of this year through 2027. So that's my opinion in regards to that, okay? Now, listen, if you're watching this right now and you've been investing for 2 years or less, listen, a lot of you guys don't know what the heck you're doing. You don't know how to value companies. You don't know how to read an income statement. You don't know how to read a balance sheet. You don't know how to judge business models. You don't know how to run projections, any of that stuff. And if you're doing that and you're watching this video right now, you need to understand that stuff. You need to know how to do that stuff, or you're going to find yourself in a lot of trouble. You're going to find yourself underperforming. You're going to find yourself in bear markets. It's going to be brutal on you. Not all markets are like this one's been the last month and a half or so, where it's just up in a straight line. And so you got to know this stuff inside and out. And if you don't, you're gonna miss out on some incredible opportunities, and you're going to cost yourself a fortune of money. And so for you newbies, learn how to read income statements, learn how to read balance sheets, learn how to value companies, learn how to run projections, learn how to understand if a company's undervalued or overvalued. So when you go to buy a stock, you're confident when you make that decision, and you know whether you're getting ripped off on that stock, because every time the stock market opens, it's going to be selling some stocks at screaming buys, screaming deals. And other times it's going to open that stock market and you're going to be getting basically scammed, and you're going to be getting an absolute horrible deal, and you're being set up into a situation that you're going to be in a stock that's not going to make money for years to go in the future. And you're going to be sitting on that stock 5 years from now still wondering, like, am I ever going to make money? Okay. And so the more knowledge you have in understanding all this stuff, the less probability you'll have of, making huge blunders and obviously costing yourself fortunes of money and then not, seizing opportunities. So learn all that stuff, guys. And if you need help understanding all that stuff, my private group is designed to do exactly that. I teach you everything I know up here through all my course curriculums, Become Master Stock Market, Millionaire Playbook. I even teach you how to hedge portfolios in there, dividend investing, how to build up portfolios, right? All that good stuff. And then you get around a higher level community as well of investors that have been doing this for quite a while as well. So pin comment down there to get you up to a higher level. And if you don't want to learn from me, go learn from somebody else that knows this stuff on a high level. Like if you can find somebody else that's been investing for 15, 20 years, their own money and built up to millions and millions of dollars, go find them. Go learn from them. But learn from somebody that's been doing this a long time and built up to incredible amounts of money. Don't just keep winging it and throwing money in stocks, because then you're just gambling. You're going to find yourself in big trouble. So either learn from me or go learn from somebody else that that's made millions of dollars in stocks and has a ton of experience. Do one or the other, okay? Don't just keep gambling money and throwing money in the stock market, okay? This is not sports betting, okay? This is a little higher level game here, okay? All right, guys, much love as always. Appreciate you joining me and have a great day.